a little careless or a little laissez-faire, if you will, with personal behavior. And that's what happened. This spike happened, obviously, when the cold weather came back. That exacerbated it, but really bad in the UK. Look at the black line for the US. We're not nearly as bad in cases per 100,000 people as the media might have you think. So remember this chart. We are not in a third wave. We are in a second wave, but more the UK than any place else in the world at this point. Okay. Doses administered. We have this incredible timeline on a vaccination and doses being administered in smaller countries with some really high numbers here. So 22.34 people per 100 in Israel, UAE, Bahrain, the US, to be the third largest population in the world behind India and China, doing amazingly well at 2.82. And remember, they started administering these in December, which is in the same calendar year that the pandemic started. That did not happen in 2018 and 2019. So again, the hard data shows that the previous administration brought this vaccine to realization in astoundingly fast time. So what's it going to take to get us back to where we were, and how long will it be before the U.S. gets vaccinated? There's a lot of data on here. You can forget almost all of it. Just look at the bottom, December to December. Now, that on the left-hand side, that's last month. And the expectation from Deutsche Bank, the Daily Shot, and other medical sources, Pfizer, AstraZeneca, is that 80% of the U.S. will be vaccinated by the end of this year. Again, that's 1 year. You'd love that to be quicker, but guys, it's still an amazing timeline considering how short a period we've actually been in this pandemic. I realize it feels like we've been in it forever, but that's not the case. I was talking with a new listener today about recency bias. Recency bias is you look back to last week, last month. What is it? Gloomy. What's last quarter? Gloomy. What is it, 4 months ago? Gloomy. Well, that's still recency bias in the grand spectrum of our entire lives. So if we can get 80% of the population vaccinated in a 1 year period, that really is pretty astounding. And that's what the data here is showing. Last week, I told you about Disney opening up their California park to vaccinate 7,000 people a day. I guess you can go on rides and the attractions and then you get vaccinated at the same time. Now, Amazon is opening up, and they're the second largest employer in America. Did you know that? 800,000 people they employ behind the U.S. government. But even though 20,000 of their employees tested positive for the virus, that's about 3%, which is in line with the percentage of the population, at least in the U.S. So I applaud this. Jeff Bezos doing his part to use the muscle of his company to get Americans vaccinated, and that's a positive. I mentioned this last week, but I want to mention it again for those of you that are 65 plus. Now the 128 million people are waiting because they've lowered this from 75 to 70 to 65. And frankly, they've been able to do that because AstraZeneca, Pfizer, Moderna are able to crank out these vaccines more quickly than at first expected. So this is a positive. Okay, so if you're 65 and older, get in line if you want to take it. It's available. Not everybody wants to. That's a different topic. We covered that 3 weeks ago. Go back and watch that episode as to whether it's the right thing for you, but at least it's there. It is there and possible. And this map shows, and I'm showing this again. I showed it last week because we've got a couple more states that are dark. I'm happy that Tennessee is one. A dark state means that shots have been given, doses have been distributed, and the doses have been used. So it's a full sequence of administration of a vaccine. And our goal is to have every state in the U.S. this dark color, and at least 80% by the end of the year. We'll be tracking this as we move forward. Okay, so tonight's question, will COVID-19 be handled better in 21 than it was in 20? Answer A, yes, because the new administration will be more aggressive in its distancing policies. Okay. Answer B, yes, because there'll be more vaccines available. Answer C, well, I don't really know yet. And answer D, no, it's just going to take time for the pandemic to get under control. And I'll give you guys some time to answer. I'm going to check comments in the log over here. Mark, good to see you. Getting vaccine next week, Mark. Okay, good for you. Hey, Nellie. Welcome from Atlanta, Georgia. All right, there's about a 25-second delay, so I use that time to just kind of fill in here, and I just mistyped. It's hey guys that I'm trying to type, and not nay guys. All right, any questions? Those of you that are new, I take questions throughout the program. I have specific questions like this, but then feel free to ask me anything in the chat box. I pause while you guys are answering, and I check the chat box just to see what's here. So what else do we have here? Okay, hey Karen, good to see you. Charles, the Villages, good to see you. No, it's going to take some time. I'm with you, Karen. We got a BB, we got D. Okay, so no A's here. All right, very good. B and B for Connie and Larry. Okay. Well, good, guys. Keep answering. If you got questions, again, type them in the box. Nellie, you're a B also. All right. And I see Kay and Jean going to get the vaccine next week. That's great. Keith, good for you. So the U.S. economy, guys, a lot going on and lots going to change. So year to date, again, those of you that are new to the program, I start this second module with this. There's an asterisk by the NASDAQ. I've never done this, and I'll tell you why in a moment. Up 5% for the year. S&P up 2.6, Dow about 2%, Russell knocking it out of the park at 8.5. Why does the NASDAQ have an asterisk? Because they were only up 1.8 last time. The NASDAQ, S&P, and Dow were about the same, but the NASDAQ has pulled out, still not ahead of the Russell, but the mega cap stocks are coming back, and that's going to be the story tonight, okay? So I had a person asked me today, so somebody watching the show, but just said, what do these squiggly lines mean? Okay, so I show you this every week. This is, and I went back to last year because we've got some new people watching. I think you guys know I manage money. Many of you are my clients. Those of you that are not clients, that's fine. We're glad you're here. So this is my actual statement from Interactive Brokers. The name of the program, look at the top so you can see, that's me. CG, so it's one of our 4 programs. And it's a Roth IRA, okay? So what you're seeing at the bottom, the blue line is actually my performance in my account. Whenever you're managing money for people, we trade against what's called a benchmark because you don't really know if we've done well unless you know how the actual market's done, okay? Because if the market always beats us, then you might as well just buy a mutual fund that's in the S&P 500 and call it a day. But that's not the way it works, usually, okay? So we're the blue line. That's the 62.5% for CG. The green line is the S&P with total return, meaning with dividends, okay? EFA stands for Europe, Far East, and Australia. So that's kind of the overseas development. And the VT is the Vanguard Total World Market, 5,000 stocks. So those are our benchmarks that we use. You can see our top performers, Tesla. You guys know I'm a big Tesla fan. Enphase, which is renewable energy. NIO, another electric vehicle. TDT, which is marketing. And Shopify, which is a competitor for Amazon. Those are the top performers. Our SG program actually pulled away at the end of the year. Same configuration. Every time you see this, the blue line is what we're doing. Specifically in my accounts, and then the other 3 indices, okay? Winners here, NIO, Tesla, Peloton, etc. So, and then our DG program still did really well against the S&P. Not quite as dramatic, but it's trading individual ETFs rather than individual stocks. So the top performers you're going to see are going to be ETFs. QQQ is the NASDAQ. XLK is technology. So what we do here is rather than trying to pick specific winners in stocks, we pick sectors that are likely to outperform, and thus they have less volatility. And for some of our clients, they prefer that less volatility. They'll give up some of that top end performance to have a little less volatility in their portfolio. So there's your explanation there. Year to date, CG, now you can see the bars are a lot easier to see. Why? Well, because it's only the 21st of the month, not very many trading days. Still up 5. You saw that the S&P was up, 2.5%, so we're beating that pretty hell. But here's the killer SG just on fire, up 12+%. Actually more today, but I didn't have a chance to grab the data. So, you're seeing some names here that you probably don't know, and rather than take any more time on this, if you have questions, This is what we do. Okay, if you're a client, you need to know what you have in your portfolios. That's why you have me here. Call me. Look it up in your e-money and you can see what we're trading. But anyway, that's what we do. Our purpose here is to give you guys the tools you need to either understand what we're doing for you or to do it yourself. And we have clients or we have people on the line that do it themselves. And this is DG for the year, so also beating its benchmark as well. Discretionary, small cap are the performers, and IYT is the transportation asset class, which is kind of exciting. We're liking seeing, FedEx and railroads and things like that doing well. So the performance since election day, the NASDAQ has clearly been the winner. But if you drill in a little bit closer, just since the first of the year, the NASDAQ has not been the stellar performer, and the S&P and Dow have caught up with it. So am I concerned? Not at all. As I have said so many times on this program, we are in a secular bull market. That means that a secular, as opposed to cyclical bull market, extends over multiple business cycles. That's important. Okay, we're in a secular bull market. So we want to see every asset class succeed, even the ones that we're not currently invested in. And as I was telling another prospect today, diversification to me is worsification. We pick the sectors that are leading, the industry groups that are leading, and the stocks that are leading in those industry groups in those leading sectors. That's how CG and SG work. That's how you can at least have a fighting chance to beat the market. There are no guarantees. Past performance is no guarantee of future performance, okay? But here's the anomaly. The Russell, which was just getting killed all of last year, just started going for the gates here. And I think I said this last week. A couple people said to me, well, why aren't we moving more into the Russell? Well, we do have IWM in DG, but if you look at a long-term chart, let's go back to 1988. This line going down is the Russell versus the NASDAQ. So small caps versus tech. And what you're seeing in this outperformance in the previous chart, let me go back to that. So that looks really great, right? But in a longer time frame, you're just seeing this little blue line here. Now, that's not enough for me to just, bail on everything else and move into small caps, but it does get my attention, all right? And we're watching that. Yesterday, the MAGA stocks. Yes, that's my acronym, Making America Great Again. I mean, it's my acronym to use to apply because these stocks really, really thrived during the last 2 years of the previous administration. Look at these returns for one day. We're in every one of these stocks. In fact, most of our portfolio, well, 2 of our programs have all these stocks. So, I think we're going to see tech continue to perform well, even though in the first part of this year, there was some profit taking. Again, I can't state this enough. In a secular bull market, you want to see every asset class perform and perform well. That's how you know it's secular. When somebody falls off, somebody else comes in to pick up the game. That's why I'm going to just throw this out. Alabama is such a great football team because the 4th string running back would be first string almost anywhere else, okay? And when the market has individual stocks and sectors that can pitch in when another sector, a leading sector like technology or communications is weakening, that's how you know you're in a secular bull market. That's why I have the confidence that I do that we're on the right side. So what's interesting to me about the strength in these mega cap stocks is they had coattails. You guys know the phrase. It's usually used in political terms that the president had coattails and the people down ticket, the Senate, the House, governors, they got elected the same party as the president. Well, the coattails on these mega cap stocks is that 775 of the NASDAQ winners, only 248 losers. That's a great ratio to start the year. That's that spike that you saw earlier on the chart. Now they're more than 86% of the components on the NASDAQ trading above their 200-day moving average. Now, for those of you that are new, I put this on here. Please forgive geek speak. That's my phrase for when I get technical here. I am a technical trader. I look at charts, chart points, quantitative data. I am not a balance sheet guy, although I do some fundamental analysis. But basically, we make our analysis based on what stocks are doing. We let them tell us when market participants want to be in them and when they are acquiring them and accumulating them. So earnings season, as I mentioned, underway, started last week. Pretty good results. JP Morgan just rocking it. I will say we are not in JP Morgan. I missed that. We are looking to buy them on a pullback. But the financial sector is dependent on a rising 10-year yield. So I don't have a chart of it here, but just hang with me. You guys have watched my shows, know this. The 10-year note issued by the Treasury has a yield. Okay. And that yield has been under 1% since the pandemic. In fact, it's been under 1% for a long time. So when the yield rises, that means bonds are going down. When bonds are going down, it means people are selling them. When people are selling bonds, that money has to go somewhere, and it almost always goes into stocks. That's a positive for banks because banks are able to make more interest when the yield is higher. Okay, makes sense? And so that's why we like banks right now. You can see here this breakout in the NASDAQ Bank Index. I don't jump on any trend, as you're probably getting the idea, within the first few days or even the first few weeks. I wait to see if it's a real deal. And then when there's a pullback, I'll enter. That's the strategy with the Russell, the 2000, the small caps, and that's what I'm applying here in the financial sector. Why are we seeing such good times in the markets? Well, let's look at the components that make that up. Median annual household income. This break in the chart, by the way, is they changed the survey and the way they did this in the Census Bureau. But we are at 20-year highs in annual household income. Yes, in this pandemic. Is everybody participating? No, I understand that. But overall, 20-year highs. So what does that mean when you're at household income highs? It means your cash and savings rates as a percentage of GDP are at 60-year highs. Sorry to emphasize, actually 70-year highs. Let me do the math here. 70-year highs, guys. I've struggled. For those of you that are on here for the first time, forgive me. The ones you've been on here and hearing me say this, you have to tune out the media. Read it in print, watch this program, listen to my tweets, watch my tweets, I should say. I'm giving you the honest truth here. I don't have an agenda. The media is trying to scare you. And it really bothers me. Okay. This is the hard data. This is from Macrobond ING. I was telling somebody today, I think I have 33 to 36 sources that I check every week. And on an annual basis, it's even more than that. But it's good data. So what does all this mean? Well, it means that U.S. household net worth spiked last year. You have to go back. This is just a couple years, but if we go back further with this, we're at lifetime highs. Okay? We're at lifetime highs in household net worth. So reviewing these last three slides, savings, okay, income translates to savings, translates to net worth. And this has been happening concurrently with what you're reading and hearing about this pandemic. And both are true. They're mutually exclusive, though, because this is very positive news. All right, very positive news. The unemployment rate, which spiked to a 28-year high, has dramatically come down. So look what happened in the last recessions. Okay, the gray bars represent recessions. Unemployment's going up. Well, it spiked at the very beginning of this recession, and then, of course, we're out of the recession. Technically, we were only in a recession for the shortest time in U.S. history. They're saying now it was 10 or 11 weeks. They're not even sure yet because it was so short. But we're getting back down to this acceptable 3.5% to 4%. It's going to take the rest of the year, but it is moving in the right direction. What I'm seeing here, and I know a lot of data on the chart, guys, but the one line you want to pay attention to is the red line, okay? Employment and household spending, lifetime highs, around lifetime. We're going back just 20 years here, but I don't have data before, but I don't want to see something that I can't verify. But at least 20-year highs. What's amazing about this is that there's no inflation risk at this time, even with this kind of spending. And why is that? Because we're not spending from ground zero. We're spending from a huge pullback that happened, as you know, from February to March. February 19th, market high. March 23rd, market low. And as we're recovering, we're not driving inflation up. That is a big positive from the financial side. Some components here that I'm watching. Netflix tops 200 million subscribers. So what are we doing as we sit home during the pandemic? We're watching movies, okay? It's a pretty big deal, all right? streaming giant, said it added 37 million subscribers in 2020. And after a decade of borrowing, Netflix is saying they're going to be cash flow positive. It's hard to imagine how strong and how high this stock has gotten when they're not even cash flow positive. But they're saying they will be, and they expect 100 subs. They had 100 subs in 2017, taking them 3 years to double. 3 years. I guess this is 2021, so the first month. But that's a great company. That's a company you want to be in, and yes, we are. So mentioned Amazon earlier, and again, I had another conversation. It's a fascinating week, a lot of conversations. And I was trying to explain to, and maybe you're hearing this too, as wondering why I've told people we have 150,000 minimum for CG and SG, and it's because we trade expensive stocks. So Amazon was up $220 today at $3,100. So let me give you a basic example. Let's say somebody came to me with $5,000 and said, I want to just buy as much Amazon stock as I could, and I want to be fully invested. Okay, so $5,000, one share buys you $3,100. I can't buy two shares because that's $6,200. So then you get your account statement, you're going, well, I'm in Amazon, but I got 35% in cash. I don't want that. It's like, well, I understand, but your account's so small, I can't buy enough for the allocation. Okay, now when we can actually trade in fractional shares, you can buy 0.0032% or something of Amazon or the other high price stocks like Google, then this problem will be eliminated. But right now, that's why our minimums are the way they are. So what we want to see is splits, and that's why I'm showing you this slide. So Amazon is up 236,000%. That's not a typo, okay, since its IPO. That's one stock. If that's all you owned, you would actually be hosting this program instead of me, okay? Look at that, $10,000 invested at 18 should be 21 million. I mean, that's just staggering. But Apple and Tesla split their stocks last year, and of course, money poured into them because they became more affordable. And for a portfolio manager like me, I can trade more shares of them because they're lower ticket. All right, hope I'm not getting too windy tonight, but there's more geek speak for you. So, all right, we covered this slide. US GDP, don't like this line down here for 20, but we know that this first quarter is probably not going to be, this is 20. 21, we are expecting to see at the end of the year positive GDP. But when you have this huge move, that's why I'm putting this slide up here. You see the move in 2009. Look at the move in 2020. It was not as severe as 2009. And of course, the recovery, look at the recovery difference. That's why I showed you this. To just see how much of an aberration this is as far as a normal recovery in a recession. It was off the charts to the upside. Good. Full employment back by the fall of 22. Now, as you well know, we have still a really high unemployment, high in that it's 6.5, 7, 6.75, I guess, depending on whether you look at U3 or U6. But way down from the 23% that it was at the height of the pandemic. Full employment, with the Biden rescue plan, anticipating by 22. So, you can see here the comparison between the Biden plan and no additional fiscal support. We're going to get to this in the political section. He's wanting to do a $2 trillion stimulus package. We'll see if he can get that through Congress. Right now, they're split 50-50, as you know. So I always cover housing, and I do this because discretionary spending is the largest component of GDP. Discretionary spending, consumer spending, I should say, and then government spending, and then industrial spending make up the three components of the gross domestic product. And the highest dollar value almost always in this is housing. So housing starts the highest in December since 2006. And I can tell you right here in Nashville, greater Nashville, there are cranes everywhere. And I know in many parts of the country this is true. Some parts there are not. But here there are. And this increase in December is just a fantastic number and bodes well for the rest of the year. Because when people are buying, they're spending money. They're putting it back in the economy. Look here at the median list price versus the sale price. So this data, and this is a question I'm just going to throw out to you guys. It's not in the slides. Is this a buyer's market or is this a seller's market? Is this a seller's market or is it a buyer's market? We're looking at several slides here, and I want you to weigh in. Look at the difference between the list price and the sales price. Think about that. Look at the dwindling amount of inventory, okay? 75th percentile, depends on what part of the country you're in. But the point is, these are going down. That's inventory, available homes. This is active listings. So if you're a real estate agent, you are not happy about this. So type it in the box here. I'm going to check for questions. Are we in based on the data that I just showed you, 3 slides, you need to know this. Are we in a buyer's market or a seller's market in the U.S.? Are we in a seller's market or a buyer's market? Just type buyer or seller. What do we got here? Okay, going on vacation next week. That's great. Dr. J, A, and B, that must be for the last one. What you say about COVID coming out of Maryland? I don't know anything about what's coming out of Maryland. That's a new one for me, okay? So, Keith, sellers, Thomas, both, okay? Anybody else? Anybody else? Are we in a buyer or seller's market in real estate based on the data that I'm showing you here? I mean, there's this purple line just dropping off the chart, literally. Charles Todd in Florida. Boy, you would know down there, wouldn't you, sir? Okay. Anybody else? Guys, yeah, sellers, Rex, that's correct. And that's the answer, guys. We are definitely in a seller's market. Great time to be selling. Tough time to be buying. We found we had to pay up here in Nashville after losing 4 homes. Hey, Jerry, how are you? Seller's market. Nellie, seller's market. Okay. We got a lot of us on the right side here. Virtually everybody. Karen, yes. Okay, so very good, guys. Home builders survey, right up to where we were in 2003. Home builders very optimistic about the future. 30-year fixed mortgage weekly. Okay, this is pretty astounding. Literally down at the bottom of the chart. I think I've been honest with you guys, or straightforward with you guys. I'm always honest. And we paid 2 5/8, which is 2.625 for those non-traders out there. And you can get 2.5 now, 800 score, high 700 score, you can get 2.5. And it's just going to, until this reverses and you start seeing, mortgage rates going to 3.5%, 4%, this building craze is going to keep going. And it's definitely an asset class. I had a question today. Somebody said, well, so what asset classes? I like stocks a lot. I do like cryptos, but I sure like real estate in the right place. So mentioned earlier, but just inflation is not an issue. Now, obviously, in some areas, it is supplies, or major appliances, I should say, cars and trucks, care, elderly care. We have my wife's parents, that the cost for that is just continuing to rise. Household cleaning supplies. Well, it's kind of tough when you're paying $20 a roll for toilet paper. We haven't done that for about 8 or 10 months, but food at home going up. I think I shared you the story about when I didn't look at the prices carefully, and a couple dozen Krispy Kremes, which we don't have in Chicago, but we have down here in Nashville, was $40 delivered. Don't do that again, okay? But prescription drugs, mentioned that in 2 episodes ago. Follow that. That's pretty important. Again, previous administration drove those costs down. Motor vehicle insurance got a rebate from our auto insurance company because nobody's filing claims and nobody was driving. Okay, that's picking up, obviously. But airline fares, I just don't know when the airlines are going to turn around. But those are big inflation components, and they are tepid right now. This is a really interesting chart. Look at the consumer price index for rents, okay? The red lines are Class A cities, meaning the big ones, and Class B and C cities like Nashville would be a B as opposed to Chicago where I was. But the rents are coming down in the biggest cities. Why? People are leaving. People are leaving the big cities for COVID, for social unrest, many because of weather, many because of taxes. Okay, so S&P earnings change from a year earlier. We are going to be negative. At least that's what the prediction is. Although I tell you what, I'm going to show you the next slide here. It's going to blow you away. Those of you that have been following know that I always end the section with this next slide. But by 21, look at where we're expecting here. 45% quarterly earnings in the second quarter of 21. Could just be an incredible year, especially with an administration that's going to spend money like crazy. And if you don't believe me, stick around to the last module. So this slide, you guys know I always end this section with. This is the Reuters summary of surprises. So What we like to see is companies that beat expectations. They're either above, they match, or they're below. A good number here is 73 to 75%. Now, as more and more stocks come in the S&P 500, at 26 stocks, we're only 5%, roughly 5% through the earnings cycle, which will go till about the second week in March. 96%, guys. 96%. I've never seen this number, even with 5%. Now, it's like election returns. With 5% reporting, so-and-so's in the lead, you're going, yeah, well, that doesn't include this city and that city. And of course, by the time they get to 50%, it's a different result. I will track this every episode as I do when earnings season starts. So you can see if this number stays in the 90s, we are off to a rocking year. Even if it stays in the 80s, we're going to be really happy about that. So here we are, Bitcoin versus Tesla. Two of my favorite topics. I'm not going to talk about Tesla tonight. People were bugging me that I was spending too much time on Elon Musk, who became the wealthiest man in the world. But Bitcoin. So I've been telling you guys that I am planning to do a Bitcoin, and really it's cryptocurrency. So cryptocurrency is the overarching category. Blockchain technology is the overarching technology, which produces cryptocurrencies, the biggest of which is Bitcoin. So is this something that you guys want to see? Because I've had so many questions on this and I haven't had really much presentation, I just want to give you a brief overview here on what the market is, how it's made up, what the purpose is, and what it might offer for you if you're willing to invest in a risky asset class like cryptocurrencies.
In a wild year in the markets, the riskiest asset is one of the hottest.
Bitcoin. There's no value. It's a bubble.
Bitcoin may well be a substitute for gold.
You can see it on this chart. After a historic climb and crash 3 years ago, Bitcoin is at it again. Like last time, a surge of investor enthusiasm is driving it to all-time highs. And Bitcoin bulls say this is only the beginning.
They see Bitcoin as a revolution in financial systems. They have been pushing this for about 11 years. They are finally getting people to listen to them.
But many bears watching Bitcoin warned that the asset is too volatile for average investors, and that it's a purely speculative bet that won't be able to scale. We'll explain. The way Bitcoin works is key to understanding why it's so popular. Unlike other investments, the cryptocurrency isn't tied to physical assets or the US dollar.
The purpose of Bitcoin is just to allow two people anywhere to exchange value directly. What that means is that there is no one central party controlling this network. There is no government, there is no central bank that could shut this down or arbitrarily raise or lower the value.
At its core, Bitcoin is purely software. It runs on a network of interlinked but independent computers. They form a ledger of transactions between people across the world. Instead of that ledger being controlled by a single master computer or a single party, the information is copied on every computer that is part of the network. This is a cryptocurrency blockchain.
It can be reviewed by anybody, it can be seen by anybody. What that does is it prevents counterfeiting, it prevents double spending. It makes Bitcoin a secure currency.
Every time someone makes a transaction, a unique encrypted signature is added to the ledger for verification.
Once a transaction is confirmed and completed, that signature cannot be changed, it cannot be altered. Essentially, it means you can't counterfeit a Bitcoin. That's what keeps the network honest.
Many Bitcoin bulls argue that the network is unhackable, but that's not necessarily true.
The issue is that to hack it, you would have to take over the network. And to take over the network, you would need your own network of computers running 24/7. And to do that would cost billions of dollars. You can do it, but is it worth it? No.
And while anyone can download and run the program to become part of the blockchain network, no one has the ability to make universal changes. Bitcoins not yet available to the public are created through a process known as mining. Miners use powerful computers to solve complex math problems to process Bitcoin transactions. This process unlocks new digital coins. But these coins aren't limitless. Bitcoin's founding code was embedded with a condition that there would always be a finite number of coins available. This scarcity is what gives Bitcoin value. Right now, about 18.5 million of the 21 million maximum Bitcoins have already been mined.
But the way the network is set up, every 4 years, the reward per batch of transactions confirmed, per mining puzzle solved, gets cut in half. So the 21st millionth Bitcoin will not be created until basically sometime around the year 2140.
And while the number of available Bitcoins is growing, the demand for them is growing faster. This demand has a lot to do with how individual investors are trading. Bitcoin is becoming easier to buy on apps like PayPal, Square, and Robinhood, which is drawing more novice retail investors who are looking for quick returns while trading at home. So far this year, there have been more than 38 million small Bitcoin transfers, trades that are less than $1,000. This is up from about 20 million in 2017. Larger institutional investors are piling in as well.
What's really going to be interesting over the next couple of years to watch is the degree to which central banks start to digitize their own currencies.
As financial systems become more digital, it's leading to Bitcoin becoming more mainstream. But the digital currency's resurgence is also closely tied to the state of global finance.
When the coronavirus pandemic hit, when you had the central banks respond the way they did, what they did was push down interest rates, lowered the value of their currencies.
That's made Bitcoin essentially a hedge against the dollar.
The value of the dollar is going down. Bitcoin proponents say the value of Bitcoin should be going up. What we've seen in the last couple of months is that people are interested in assets that have high returns. They are willing to take risks, and one of the highest returned, highest risk assets anywhere in the capital market is Bitcoin.
This potential for big profits is driving a frenzy of momentum trading. And for many investors, these bets are paying off. The digital currency is up about 220% this year. One reason investing in Bitcoin is so risky is how small the market is. The total value of Bitcoin in circulation right now is around $420 billion.
The value of Apple stock, just Apple, is about $2 trillion. The value of the financial market for gold is north of $12 trillion. So Bitcoin is still very small. It doesn't take a lot of people to come in and push the value up. The smallness of the market contributes to these sort of explosive price moves that we've seen.
And because the cryptocurrency is decentralized, there is no insurance backing it.
There are no backstops to it. It could go down to zero tomorrow and there would be nothing to stop it. There are no circuit breakers. There are no closing bells in Bitcoin trading.
Until the market matures, experts warn that the price of Bitcoin will continue to see volatile swings.
So, is it risky? Yes.
Okay, guys, there you go. So now, do you still want me to do that video? Do you still think you might want to invest in Bitcoin or in cryptocurrencies? There are other coins besides Bitcoin, but certainly Bitcoin is the most well-known. I have been watching a new spiritual advisor. His name is Dutch Sheets, and I'm really impressed with him. I'm going to talk a little bit more on that about in the next section. But one of the things he says is you really have to pick a position in life. Are you going to be an explorer or are you going to be a settler? Are you going to be Lewis and Clark just because you like doing that? And then when you get it all settled, you know, the settlers who don't want to take that risk go out and they build the homes and the communities and settle the land. That's why they're called settlers. There's no right or wrong, but you kind of have to pick your space on that, both in a spiritual sense, but certainly I would say in an investor sense. So if you guys want to learn more about this, I am happy to do a special webinar on it. Let me know either in the chat over here, shoot me an email, cb3@cb3.com. Okay. So the stock market in 2021, A, will be more predictable than 2020, B, less predictable, C, more predictable unless politics gets ugly again, which it could, okay. D, pretty much a typical year. Let me look for comments here while you guys are filling that in. What do I feel is the number one coin and number two coin and number three to invest in? Okay, good question from Tom. Number one is Bitcoin. So about 60% of what I'm invested in is in Bitcoin. Number two is Ethereum, which is actually the platform. The coin's name is Ether. That's number two. And so after that, It used to be XRP, but XRP has gotten into some issues with the Securities and Exchange Commission. So I would say either Polkadot or Bitcoin Cash, ticker symbol BCH. Okay. Good question, Tom. Thank you for that. Dr. J, the Bitcoin blockchain computer ledger reminds me of a bit toward music down. Yeah, there's something about that, Dr. J. The whole music download thing that Napster started in many ways. So, okay, what do we have here? We got B, D, pretty much typical year. Nelly, okay. Charles, C, more predictable unless politics kicks in. Less predictable. We got a variety of answers here. I think it's going to be pretty typical, guys. First year administrations usually aren't that dramatic. And we'll see if that's the case. We do have a split Senate, 50-50. Cannot tell you the last time that was the case, so it's pretty rare. Politics in 2021. So I've changed the name of this segment, obviously, because the 2020 election is over and Biden-Harris ticket is in office. What do we see right off the bat? The S&P 500 gained about 13.5% since Election Day, marking the best post-election market performance for a new president in modern history. We're discounting Franklin Roosevelt. So from election day to election day, the S&P rose 57% under President Trump, 53 and 52 under President Obama. So for those of you that are concerned that the market is going to crash, there is certainly no indication of that. The market seems to like. And why is that? If you just look at since election day, 2020 versus 2016, the Biden, election, even though there was a lot of question as to whether he was actually going to be president, at least for several weeks, market much stronger in 2020 than 2016. I'm not going to offer a commentary on this other than to say my job is to bring you the data, and I trade the markets based on the data that I'm seeing in front of me. Right here, the market's saying we don't care. When the markets say to you, we don't care about almost anything that's happening, what does that mean? There's only one answer. We are in a secular bull market that has Teflon for almost anything you throw at it. Okay. So within hours yesterday, what happened? Well, President Biden canceled the Keystone Pipeline permit. Now, we have some viewers in Montana that mentioned to me, and again, this is not my opinion, this is the viewer's opinion. When he did that, he pretty much guaranteed he'll never get a vote here in this part of Montana because there were millions lost in revenue for this particular county because of the canceling of permits. Now, that doesn't mean they can't drill. It just means you can't apply for new permits, okay? Federal government's not going to issue them. President Biden said he's going to rejoin the Iran nuclear deal, issued executive orders on extending student loan, pandemic benefits, a mask mandate for anyone on federal property, and has stated he will rejoin the Paris Climate Accord. 22 executive orders all in all. Just as President Trump undid a whole lot of what President Obama did, I'm expecting President Biden will do the same for President Trump's initiatives. This is the map. This is the map. The Keystone Pipeline has been one of the tools. Now, this is me offering my opinion. Well, this is fact, and then I'll get to my opinion. That this is the movement of oil from Canada through the center part of America. And that purple line that you see there is through Montana, through this particular viewer's county. And it ends up in Houston, goes through Cushing, Oklahoma. And that's what the flow is. And then it gets on barges and gets shipped around the world. The U.S. became energy independent during the Trump administration. Now, you may not like that because they did it on the back of fossil fuels, primarily because of drilling in the Bakken and other areas like that in a technique called fracking. Well, the Biden administration is not particularly friendly toward that. This is our two Senate leaders. So we have a House majority and a House minority. Technically, Mitch McConnell became the House minority, but all it takes is one vote. So I mentioned this last week. If you missed last week's episode, go back and see who is the most important senator. It's not either of these two men. It's not Rand Paul. It's not Ted Cruz. Who is it? Well, it's Mr. Manchin in West Virginia. Mr. Manchin, yeah, he is the very, very most moderate Democrat, and he could swing this. What the Republicans want to have happen, of course, is a lot of 51-49 votes so that Kamala Harris cannot break the tie, because with a 51-49, there is no tie. We will see how that plays out. All of these policies, of course, affect our investments. So the breakdown between Democrats and Republicans, just got this data this week. The number of very liberal Democrats is rising. You can see the light blue line at the bottom. The number of moderate conservatives is rising, and the number of very conservatives has been pretty stable, okay? I think in general, there is a liberalization of the U.S., and a lot of that is because of population shifts. Again, beyond the scope of tonight's presentation, we'll get into that at another time. The statement from the Wall Street Journal is the U.S. has a weaker economy. There's an asterisk by that. Shorter life expectancy, and voters will have moved toward the edges of both parties. We can, I think, all agree there is not much center left, except for Joe Manchin in West Virginia. And I dispute the Wall Street Journal that we have a weaker economy. I'm showing you data to prove that we have a phenomenal economy. The problem is these media outlets that have had so much eyeballs on them, but whether it's TV or printed material, because of their coverage of a very flamboyant President Trump, they're in big trouble right now because nobody's going to watch them. I mean, Biden just is not going to shake things up, in my opinion, the same way that Donald Trump did. Now, if he resigns from office or otherwise is unable to perform his duties, that certainly would get the media back going again. But the Wall Street Journal is trying to get your eyes on this. I'm telling you, we're in a strong economy. We're an astoundingly strong economy. There are certainly pockets that are hurting. I don't mean to dismiss those. And you probably know people, as do I, in those pockets. But overall, the U.S. is on solid ground. Okay, so what happens with fiscal policy? Well, the U.S., this red line that you see is the proposed $2 trillion, 1.93 something that Joe Biden is trying to get through the Congress in his first term. Not just his first term, but his first 100 days. That's the honeymoon period, if you haven't heard that. You're often judged on how those first 100 days are going to go. Well, the U.S. would be the number one leader of fiscal support for its economy if that 1.9 goes through. If not, it'll be a smaller number. We'll see how that plays out. Largest tax increases in U.S. history. You didn't really think we were going to elect a Democrat administration and not have tax increases. Look at the years on the left-hand side. Do you see anything in the 70s or the 80s or the 90s or the zeros? There's a reason for that, because Joe Biden in blue here is basically saying the tax plan for 22, that's next year, and then down at the bottom, tax plan for 21, these are going to be among the biggest tax increases since 1940, dwarfing anything in the 70s, 80s, 90s, zeros, or 2010. Okay, it's just a fact of life. The American people voted for this, and that's what they're going to get. So if you don't think you're paying enough taxes now, you're going to get your wish, because it's going to be more. Almost certainly. And where's that going to go? A whole lot of it, at least based on the Congressional Budget Office, that's a lot to say, is going to go towards entitlements. I mean, basically, the Democrats are believers in redistribution, and you're going to see an increase from 20. Look at this projected out to 2028. And if it's a two-term presidency, many are. Trump was not, but many are. These entitlement numbers, as far as a percentage of GDP, 13% of GDP. How are we going to support that? Guys, I don't have that answer, but I plan to be here telling you how we're going to let it process our decision-making for your portfolios. So these are the definite economic and market implications that every investor needs to know now that Biden, and should have fixed the typo, sorry about that, has become president. Higher taxes, more regulations right off the bat. You can see that with the Keystone Pipeline. Increased societal redistribution. I just said that, and I'm sorry if that strikes some of you the wrong way. The reality is that's the Democrat platform. That's how they get their votes, and there are probably some good things in that. We do have a chasm between the haves and the have-nots in this country. How that gets solved, I'm not sure. if it's best done at the federal level. But again, my job is not to stray from what I do for you, which is manage money and give you sound financial advice. So I will be an observer rather than an active participant in that. But there's going to be more government spending. There's absolutely going to be more government spending. We're already running massive deficits, and the debt, different than the deficits, right? The deficit is how much we're behind every year. We have more expenditures than we do income. But whatever the difference is gets added to the debt. Okay. And it just goes up and goes up and goes up. And eventually it's going to be a dollar in debt for every dollar that we create in GDP. And that's scary. But again, my job's just to watch and make the best decisions based on the data that I see. And that's why I do the show. So after the 2021 inauguration, I am upbeat that my portfolio will do better in 2021 than it did in 2020. B, concerned that my portfolio will do worse in 21 than it did in 20. Hopeful that my portfolio will be unaffected by the outcome of the presidential change. We don't know. We'll know more in 100 days. I think a lot's going to happen. You start with 22 executive orders in the first 24 hours. That's a pretty fast start. All right, answer D, I don't know what to expect. So I've got a little bit of time here while you guys are getting past this delay. And what do we got? The Fed is leading the market increase. As long as the Fed is easing, markets will rise. Charles Todd, you're dead on. The Fed has said, Jay Powell, and Jay Powell probably will stay. I'm guessing that he'll be invited to stay since he was anti-Trump. And I think that Biden will like to stay with him. The Fed, as long as they keep interest rates 0 to quarter, it's a spread between 0 and 0.25%. Yeah, Charles Todd is correct. Canada's not happy about a lot. You bet. Correct, Connie. Are there not federal permits in place protecting that on federal land? That's a complex topic, too much to handle right now. The answer is there are some, Tom, but that's an item discretionary. Hey, Ice, good to see you there. CCA, what do we have here? Hopeful, be unaffected. CBCA. Okay, Karen, that's good. Hope you guys, some of you had CG. If you're one of my clients, you've got CG. Every single client has CG, and then they have a mix of other things. So hopeful it'll be unaffected by the outcome. Don't really know what to expect. Well, nobody said D. Oh, yeah, Rex got a D. Okay, so again, a variety of answers. We'll be watching it. That's why we're here. That's why we do the show for you guys. So, hard to believe, but here we are. The show got a little long, but, just a lot going on here in the early part of the year, new presidential administration. I close every program with this from 2 Timothy, for we have not been given a spirit of fear, but a spirit of power, love, and a sound mind. It is so important to keep a positive perspective. If you are inclined to listen to a spiritual person, I can't recommend enough Dutch Sheets, D-U-T-C-H. I'll put it in the chat over here. He has a 15-minute chat every day, and there's a little bit of politics, but mainly he's just upbeat. Now, obviously, it's a spiritual context. It may not work for you, but I find it very uplifting. His voice is actually very soothing too, and I've made that my first item that I listen to in the morning. So that's just some suggestion there. But just know that, as I said in 2020, and I'm now saying in 2021, it is my deeply held belief that we will not only survive this pandemic, these politics, and the world economy that seems so turbulent. We will not just survive them, we will emerge a stronger people and a stronger nation. And I believe that from the bottom of my heart. I really do. And that's why I come on here every week. That's our show for Thursday, January 21st. I am Charles Brown, Portfolio Manager with CB3 Financial Group. So glad you made it here tonight. Hope you'll be back next week. Tell your friends. We'd like to grow our audience. Just remember that at CB3 Financial, we don't just manage your portfolios. We don't just manage your assets. We become one of them. From COVID to U.S. politics to the world economy, this is CB3 Live, and we'll see you next time.